Uh, Thank you, sir, for providing us the opportunity to host this call. Good evening, everyone. Today we have the entire management of Indian Bank, where we will basically discuss the Q2 results call, as well as the outlook on the growth, margins, and asset quality going forward. We first welcome Shri Shantiraj Jain, MD and CEO, Shri Imran Siddiqui, Executive Director, Shri Mahesh Kumar Bajaj, Executive Director, Shri Ashutosh Chaudhary, Executive Director, and Shri Bajrang Singh, Executive Director from Indian Bank. Request sir first to briefly give us the highlights of the results, Q2 results, and thereafter we can take some time basically for the outlook on the growth, margins, and asset quality going forward.
Thank you. Good evening, all analysts and investors for post-result Concall for Q2 FY2024. Our business has grown by 10% and reached to 11.33 lakh crore in September 23. Under business, deposit has grown by 9% and reached to 6.41 lakh crore, and credit has grown by 12%. Under deposit, the saving deposit has grown by 8% and the term deposit has grown by 10%, and we could maintain the domestic CASA more than 41% in the current quarter. In a credit side, our all component RAM has grown by 12%, corporate has grown by 12%, under RAM retail has grown by 14%, and under retail housing loan has grown by 13%, auto loan has grown by 36%, and personal loan by 49%. Likewise, in the agri side, we have grown by 16%, and 75 crop loan has grown by 17%, and 75% of the crop loan is a gold loan, which is growing by 28%. The SHG has grown by 41%, agri allied by 46%, and investment credit by 11%. MSME has grown by 5%, and corporate has grown by 11%. But in case of a standard corporate, has grown around 14%. Likewise, the mid corporate has also grown by 11%. So this is a business side. As far as our profitability is concerned, our operating profit has grown by 19% on a YOY basis and sequential by 4%. Our net profit has grown by 62% and sequentially 16%. The operating and net profit has grown on the strength of NII, which has grown by 23%, and when the non-interest income has also grown by 9%, and under the non-interest income, our fee-based income has grown by 11%. Under fee-based processing has grown by 17%. PSLC income has grown by 52%, and 336 crore is unamortized, which will consider in the remaining Q3 and Q4. And bad debt recovery has grown by 6%. As far as our asset quality is concerned, the gross NPA has come down from 5.47% to 4.97%, 50 bips reduction, and the net NPA has come down from 0.7 to 0.6. PCR improved from 95.10 to 95.64. We maintained the trend of recovery more than the slippage. In the current quarter, the slippage was around 1,976 crore and the recovery was 2,265 crore. So the last year also our slippage was 6,642 and the recovery was 8,504. In the last half year, total slippage was 3,730 and the recovery is 4,272, which is as a result, our gross net has come down. As far as our SMA 1 and 2, it has come down slightly, more than 5 crores, and we are maintaining the collection efficiency of 95%. As far as restructured book is concerned, it has come down to 9,980 crores, COVID restructuring, and we are having around 27% provision there against. So asset quality, whether SMA 1 and 2, NPAs, and restructured book, all is coming down. As far as capital is concerned, we are at 15.53. We have not added the 6 months profit. If we add a 6 months profit, it will improve by around 1%. So 16.53. We started from 16.49 in March and up with profit 16.53. This shows that our generations are adequate to take care of our growth, because in spite of around 12 or 13,000 crore growth, our capital adequacy is intact. As far as our treasury is concerned, we have added around 13,000 crore in a treasury in the last quarter, and as a result, our holding on yield, which is on AFS book, is around 7.30%, and virtually we are protected up to 7.27%, and here around modified duration of AFS and HFT is 2.84%, and out of around 2 lakh crore of a treasury book, 147 is HTM and 56 is AFS. As far as digitization is concerned, our digitization, I now request my colleague Bajaj to talk about digitization, what we are doing. But besides this, we have opened around 38 branches in the first half. Our all RRBs are doing exceedingly well. Their business has grown by 21%. Their operating profit is 16%, and the net profit is 36% in half year. And all three are having net NPA 0. And our joint venture Sompo is also having a profit of 123 crore in the first half, as against 85 of the last year. Likewise, our subsidiary Ind Bank Merchant Bank is having a profit of 3.87 crore, is against 1.16 crore. So all our joint venture subsidiaries and RRBs are doing good. Now I request our Bajaj Saab to discuss about the digitization, where we are, digitization business, where we are focusing and all.
Thank you, sir. Good evening, everyone. As far as the digital transformation initiatives are concerned, we started almost 18 months back. So till 30th September, we have done almost 63 journeys. Out of that, more than 45 journeys are pertaining to the digital lending platform. And it has started yielding result also. Last half year, we did close to 376 crore of business, and this half year, we have closed 29,000 crore business.
376 crore to 29,000.
376 to 29,000 crore. Whereas in the retail asset, we have done close to 2,500 crore, agriculture 18,700 crore, MSME 3,000 crore, and liability business 5,000 crore. So put together, even the last year, entire last year, it was 5,600, and this year, first half itself is close to 30,000 crore. We have already done more than 45 journeys, and this quarter we are planning to launch another 12 journeys pertaining to this digital lending platform. As already have told, the business has quarter on quarter. This quarter itself, we have done 20,000 crore, whereas the last quarter we did 9,000 crore business. On the DLP and omnichannel, the omnichannel last quarter also we were telling that we are going to launch, and the 15th August we have launched the omnichannel for the closed user group, so that we are testing the ground before going to the public. So next 3 to 4 months we will be doing the rigorous testing, and then we will go to the field. On the digital channel business, the YOY growth on mobile banking is close to 47%. Transactions on the mobile banking have gone up by 17%. UPI users have gone 34% YOY. UPI transactions have gone up by 64%, 65%. Net banking user also, YOY growth is 37%. Debit card users grown 16%. Credit card users grown 10%. And as for the UPI QR code, it has gone up from 4 lakh to 39 lakh. And the UPI QR code transactions have gone up. The last half year was 108 lakh, and this year it is 998 lakhs. So close to 10 crore. With that, all these now we are
okay.
Open to
I'll add 2-3 points basically, which is very important. One is the margin. So the margin, domestic margin is 3.52, is against 3.61 of the last quarter. There's a reduction of margin of 9 bips. This is because of increase in the cost of deposit, first point, and second one is that there is a interest reversal of some KCC account around 261 crore, impacting margin by 12 bips. At the beginning of the year, we said that we will be able to protect our margin of 3.41 which was the FY23 margin. We are presently at 3.57. We told 3.41 plus minus 10-15 bits, and we are near to that. The deposit we told at the beginning that will grow between 8 to 10%, so we are 9%. All our guidance advanced 10 to 12, we are at 12. GNPA below 5, we are at 4.97. NNPA lower than 0.9, we are at 0.6. ROA, we said that 1%, we are at 1.01. And that cost income ratio, we said 44, we are at 44.29. And credit cost, of course, we said 1.25, we are at 0.81. And the slippage ratio, we told about 1.5, we are at 1.67. So majority of our guidances, we have results are in line with the guidance. No, we are open for.
Thank you for the elaborate guidance, sir. So before we start with the call, just wanted to understand your thoughts, particularly on the credit growth front and deposit growth front. So our deposit growth seems to be pretty on the lower side. Our CASA also has come off a bit during the current quarter. Any strategy that you have to protect your CASA going forward?
Yeah, we have done a number of steps in this regard. What happens? The deposits comes from salaried customers. For existing customer, deposits comes from FI customer, deposit comes from NRI customers, deposit comes from the institutionals. So deposits come from the government business, right? So what we have done from last about 1.5 years, we have created RNGR cell, which we call their liability vertical, which government resources. So 6 or 7 centers, which is at Lucknow, at Chandigarh, at Calcutta, at Chennai, at various centers. So we are getting a good business, government deposits. FI is one channel which is also giving us more than 20% growth in the CASA. We have started our remittance business and our business. We have recruited the people, and the results will start coming on that. The fourth one is what happens. We analyze 200 centers where our deposit growth is substantial in the system. We have already opened around 51 retail acquisition center and deployed manpower. We have also come out with the various schemes like insurance free or some charges reduction on a deposit. Anybody will give from the institutions or from the organizations. We have developed various products for religious institutions, for cooperative societies, for number of sectors. So we are working on a various sectors, and that is why we will be able to maintain in this increasing interest in at a domestic CASA more than 41%, and we'll continue to work on that because going forward also we need to maintain that ratio.
What are your broader guidance on credit and deposit growth for FY24, sir?
So I'll stick to that 8 to 10%, which I given at the beginning. So we are at 9%, so that number. And even the advances also 10 to 12%, we are at 12%. Generally, we are conservative in giving guidance, so we'll achieve those.
Sure, sir. We can start with the Q&A now. First question we have from Mr. Ashok Ajmera. Mr. Ajmera, please unmute yourself and go ahead.
Thanks, Anand, for giving me this opportunity. First, the question first. Good evening, Jensab, and all the top brass of the bank sitting there. Sir, as usual, sir, rich compliments to you for the fantastic results on almost every parameter and achieving, almost every target given. Having said that, I've got just a couple of questions and some observations. One is, sir, on the treasury operations. Our AFS book is increasing, from has gone up to originally from 45,000 crore to 49,000 crore in last quarter to now 57,000 crore. And modified duration also, which used to be generally 1.8 to 2.25, has gone to 2.84. Maybe last quarter also it was 2.88. So, can you give some color on our overall treasury? What is the thought process behind it, and how much are we making the money, and whether it is a good idea to give a conservative statement for the credit growth of just 10 to 12% and putting more thrust on the deploying the money in the treasury?
So thank you, Ajmer Raji. First, you rightly observed that our AFS book has increased. This was intentionally we have increased our investment book because there's a time to increase your durations, because we know that going forward the interest rate will come down and this is the right time you can invest at a 7.3 to 7.40 between this rate, and we have invested this money and as a result our holding on yield has improved. So what happens, this investment will continue to give us a good return. We are adequately liquid, we are liquid. Even our LCR is 131%, so we are liquid for the credit growth as well. But you know, I'm very margin conscious. Wherever we are getting good proposal and at a good margins, we are moving ahead with this. So wherever the asset quality and margin both combination will happen, we are moving. And you rightly said 2.84, it has become 2.84. So we built up.
So the other question was coupled with that only, sir. On the credit growth side, our bank has got, such an efficient management led by you and the entire very, very good underwriting standards, very good credit, bottom to top line. But if you look at the growth on the, domestic book, it's only 8,000 crore on a book of 4,58,000 crore. Whereas the overseas book has gone up by almost about 16-17% to 4,837, which gives a very small yield comparatively. So, some of the other banks, of course, one or two banks are giving even 20, 22%, 24%. I will not say that. But can we not go for at least 14, 15%, 14 to 16% and make some good money on that? Because I understand your AA, AAA rating is percentage-wise has gone down, because there you don't get the proper NIM or yield. Whereas even there are scope for even A and some of the good BBB plus accounts also with a good underwriting standard which you have. I think something on that can be thought, and this conservatism should be reduced and we should come to some realistic level of the credit growth.
No, sir, we are open actually. That is why I am telling you 14 to 15% in corporate. Virtually, what happens, our NPA has come down substantially in the corporate book as well. And mid-corporate too is growing around 10-11%. And we are open for all, even BBB, AA, AAA, all these accounts, provided we get a good margin. So, sir, in market, there is no point of giving credit. And which you can see our NII growth is at 23%.
No, looking at that only, I am saying that if the book further expands, it can.
We are open for expansion, sir. We are actually growing in a planned way. So our risk is spread, our return continuously. Bank can give the results on a continuously good result on a sustainable basis.
So coming on that only, sir, in the unrated, other than government unrated, it's almost about 10,000 crore, 9,962 crore. So those unrated, other than the state government and the central government accounts, which are those unrated accounts, and whether agree, what is the composition of that?
I'm telling you what happens. Our 74% is a BBB plus above, right? 15-16% is a PSU, 90%. Remaining 10% is basically the HAM project where after completion you get a rating. Okay. Or an educational institution, or a hospitals, or a contractors, or a LRD exposures and all, where you will not get a rating.
I understood.
These are all, majority of these are cash flow based lending. And
sir, just a small amount, but a question on this PM Swanidhi. It's a new product, which is being, of course, aggressively marketed by all the banks. Almost about 4.5 lakh accounts with outstanding of 586 crore. What is your experience, even for us to know that on Swanidhi, how are we going and what is basically our experience on these accounts?
No, from the banking perspective, I'm telling you, this is a committed disbursement, not outstanding. So disbursement is much, much lower because there are three variants of the PM Swanidhi. First is a 10,000, then 50,000, and then beyond this, right? 20,000. 20,000 and then 50,000. First, suppose you pay 10,000, then you are eligible for 20,000. If you pay 20,000, you are eligible for 50,000. So there are three things here. First is the interest rate, you are getting a good return, 13% or so. Government of India is giving 5 or 6% subvention. Government of India is guaranteeing you. So as a bank's perspective, your asset quality is guaranteed, your return is guaranteed, you will increase your customer base. So from the banking perspective, they have protected us from all angles.
Okay. So on that, my last question in this round, sir, is on our overall recovery prospects, if you combine with NARCL, some of the disposals coming forward, NCLT, and some, to the other ARCs, some scheme, some plans for selling some assets or some accounts. So where do we, can you give some color on that? How do we look the next, 1 or 2 quarters now in this year remaining?
So Ajmeraji, 2-3 things. We are continuously giving the improvement in the recovery. We decided that our recovery should be 8,000 crore. So in the 6 months, we are at a 4,300 crore. So we are going on that. Second one point is that this recovery, NARCL. What happened in NARCL, around a 41 account of 8,900 crore has been identified. We shifted around a 3 account to NARCL and book balance of 1,959 crores. And some of the money we received, some of the NCD, OCDS we received. And remaining 8 accounts, there we have received a bid. So what happens when you receive a bid, it go to the Swiss challenge. Anybody can offer a higher rate, then whosoever gives a better rate will give to that. So this 8, first we take from them and go for Swiss challenge. This also second is going on. Third is where we think that we can recover more, so this keep on hold. Some transactions we are keeping hold. So we are working on that, but I am telling you, we will have a recovery more than what we planned in the current financial year.
Okay, sir. Thank you very much and all the very best. If time permits, I will come again with some data points, sir.
Okay, sir. No issue. Thank you.
Thank you, Ajmeraji. Next question we have from Nilesh. Jethani, please go ahead.
Hi, sir. Good evening and thanks for the opportunity. First of all, congratulations on the great set of numbers. So my first question is on the asset repricing. Considering majority of our book, which is MCLR linked, just wanted to understand what percentage of overall advances is currently reflecting the existing MCLR rate, and the balance, when can we expect the repricing to happen?
As on date, our 64% book is on a MCLR. Last quarter also it was a 64%. We are maintaining around a 31-32% is on a repo. So what happens? This book is keep on coming for repricing. Maybe around a 40,000 odd crores will come in the current quarter for repricing. What happens? Today my 1 year MCLR is 8.70 and prior to that it was less than 8%. So this will come for repricing. In the meantime, some deposit will also come for repricing. So it keeps on happening. But our endeavor is that we should be able to protect our net interest income and the margin.
You said 40,000 will come for repricing in Q3, and what could be expected in Q4 then?
You see, when 64% of the book is that, so 5 lakh 64, 3 lakh crore, right?
Yes.
So
46,500.
46,000 currently is coming. So virtually what happens?
Q4.
Q4 is 46,500.
Got it. So second question was, so directionally, since large part of our book is MCLR linked and with interest rates now largely being stable, so wanted to understand deposits will continue to reprice at their own pace. So what gives us confidence in maintaining the NIMs going forward?
So you see, the RBI has increased the repo rate, right? From May last year. We too have started increasing our deposit rates, right? So what happens? Majority of the deposits are in the bracket of 1 year to 1.5 years. Majority of the, or in fact, our duration of our liabilities is 1.62. So majority of the book has already been repriced first. So entire your CD book, your wholesale book, your less than 1 year book, even the 1 year book has been repriced. So small portion is again 2 year, 3 year, 5 year. It will come for repricing at a very small percentage. So when your majority of book has already been come to repricing, some may also come, but this MCLR will take care of all these issues. First, second, you see our treasury yield is also increasing. So all this give us a confidence that we should be able to protect our margin. And the way we are doing, sir, our NII is growing.
Got it, sir. That was helpful. And one last question from my side. I wanted to understand the recovery number target expected for FY24, and also wanted to understand since the PCR is in a much higher range today, so that contribution to other income will continue at the same pace, or we can expect some decline on that side?
So your point is that recovery, we have, at the beginning of the year, we said 8,000 crore is our recovery target, right? So today we are at a 4,272 in a 6 months. So we are confident that we will be able to achieve this 8,000 crore number. And majority of this recovery will naturally come from the NCLTs, Surface E, OTS, ARC, compromises. This all will happen at this, because we are having close to 40,000 crore of a PWO book and around a 25,000 crore of a gross NPA. So huge number we are having. So I'm sure that going forward this number will continue to appear.
Got it. And on a broader basis, this 1% ROA, so on a sustainable basis, if one has to take out the recovery number, will be able to still maintain a sustained 1% ROA, say from a FY25 and beyond perspective, since decent portion on the ROA is contributed by the recoveries also. So I wanted to understand sustainability of the same.
Sustainability, you can see that our 1.06 is a ROA for the last quarter, and at an average is 1.01. So the way the NII is growing, and then your net NPA has come down 0.60. So where is the baggage you are having? We are having a standard asset provisions and all this. So we are optimistic that we should be able to maintain this ROA more than 1%.
Got it, sir. So thank you so much for replying to all the questions.
Thank you.
Thank you, Nilesh. Next question we have from Dikshit Doshi.
Yeah, can you hear me?
Yeah, Dikshit, go ahead.
Yeah, thanks for the opportunity and congrats for the good numbers. A couple of questions. Firstly, if I see from last almost 3-4 quarters, in the provisions, we are doing provisions for the standard asset as well, just to make the book much more stronger. And now our PCR is also reached 95% plus, and our net NPA is hardly 0.6. So and also we are holding a lot of provisions for standard asset and excess provision. So can we assume that the provisions for standard asset and as well as NPA will continuously coming down over the coming quarters?
It should come down, sir. My point is that 0.6 is a net NPA, not 2,800 crore. So naturally, we are not carrying any baggage. And this is a standard advances also. We are making provisions based on our own assessment, portfolio based and asset specific based, right? So should take care of any kind of eventuality will come. So bank is actually fully protected to my mind from that asset point of view. As at this point of time, if nothing substantially go wrong, that is a different issue. But otherwise, we are sure of our asset quality and provisioning parts.
Yeah, so this provision for standard asset, we are doing it from many quarters and we are holding a lot of excess provision. So is it fair to assume that provision will not increase substantially? If you may continue doing the standard asset provisions, but it will not be significantly increased.
Because as a bank, we should always be making buffers, but not substantial, because based on the what is happening in the economy, right? And various parameters are there. Based on that, every quarter our RMC decides what kind of risk we are seeing in future and all, which sector, which industries, which right business. But all this keeping in view, I think that there should not be any substantial increase.
Okay. And my second question was regarding the QIP. So, if you can mention that till what period we have the permission from the SEBI to bring down the government holding, and are you planning the QIP anytime soon, or we may wait for that time till the SEBI has given the extension?
So our shareholders and our board has given approval to come out with a QIP up to 4,000 crore any time during the current financial year 23-24, and we are accordingly working with that, and so our endeavor is to approach to the market at an appropriate time.
So till what period we have an extension from SEBI?
That extension is with us. So I think that extension is August 24. That is extended by one more year.
Okay, fine. Thank you. That's it from my side.
Next question we have from Mona. Mona, please go ahead.
Yeah, hi sir, good evening. So my first question, I just missed your guidance on margin. So where does it stand, the margin outlook?
Yeah, but at the beginning of the year we said that 3.41 was the margin, and our endeavor to protect that margin with a 10 plus minus 10-15 pips. Today is against 3.41, we are at 3.57, right? 3.52 of the last quarter because of that interest reversal and all happening like ACC loans and all. So whatever based on the MCLR book, credit that repricing, measure repricing has already been happened. We are hopeful that we will be able to maintain our guidance which we have given at the beginning.
Sure. And how much was the impact of interest reversal on the margin this quarter?
Around 12 bips.
Okay, got it. Secondly, on the if I look at the breakup of provisions, you have made some 574 crore towards standard assets. What exactly is that?
This is basically provision we made on a portfolio basis, and even in some accounts on account specific basis. So on a portfolio basis, based on the certain parameters we have, we are making provisions.
Okay. So if I have to understand X of NPA provisions, how much do you hold on the balance sheet? What would that number be?
You are interested in
total provision,
standard asset provision which we are having.
Yeah.
Or CFO, Sunil Jain, standard asset provision what we are having.
Sir, for this quarter, sir, net
increase. What is the as on date standard provision?
Yes, sir.
We are having total amount.
Sir, as on date, we are having total standard asset provision of 7,405.
That you have to exclude this 7 June because some of this may be the NPA. So yes, standard asset provision how much we are having. So calculate and tell, right? Yeah, we'll let you know.
Sure. Just finally on the restructured book, if you could share the outstanding, including the MSME book, and how much slippages we have had so far.
So in a restructured book, basically we are having a 9,980 crore. Na? What? 9,000 is out, and we are having 27% of a provision. No, I am telling you the entire restructured book. What happens? We have done a total COVID restructuring close to 18,400, right? And today balance is 9,900, so close to 10,000. So reduction of 8,000. Out of 8,000, 2,500 is gone to NPA, and remaining we have recovered. So 5,500 we have recovered. So today virtually 54% is outstanding remaining in the restructured book. You understood what I said?
Yeah, got it, sir.
Okay.
And just if you could share the standard asset provisions on the balance sheet.
Yeah, we'll tell better.
Yeah, I'm done. Thank you.
Okay, Mona. Next question we'll take from Darshil. Darshil, please go ahead.
Here we have, sir, 5,008.
Darshan, please unmute yourself and ask your question.
Hello. Hi.
Yeah, Darshan, please go ahead.
Yeah. Sorry. So there was some. Good evening, sir, and thank you so much for taking my question. Congratulations, sir, on a great set of results. I think most of my questions have been answered, sir, but just want to know if any guidance we could give on FY25. Maybe can we have a higher growth, because I think we are being a bit conservative in terms of our growth. So anything color on FY25?
FY25. We will give the guidance FY25 when we complete FY24. We'll give a guidance on FY25 when we complete FY24, sir. Because visibility of having 1.5 years from now is weeks.
Okay. No worries, sir.
But we will continue to grow, absolutely. Because you see, this is a bank which is growing more in retail than the corporate. It's very easy to have a good growth when you do a corporate lending. But here the retail growth is more than the corporate growth. This is a big point. And this shows that our branches are able to create asset. And when all branches are able to create asset, your customer base increases. So in the future also you can grow. So bank will continue to grow. The business model is like this, sir.
Okay. And so just like if it would be right to state that we are being a bit conservative in terms of our guidance, and we can, maybe over deliver, under promise. Would that be fair?
It is always better to give guidance and cross that guidance rather than giving a higher guidance and then.
No worries, sir. Thank you so much, sir. Congratulations once again. All the best for future. Thank you.
So we have basically one question from the chat box from MV Mahesh. MV Mahesh, you would want to ask yourself? Yeah, we could just see him, but I think again he has not. So basically, sir, the question was that there is a corporate slippage of about 570 odd crores during the current quarter. Any color that basically you can give on that corporate account?
Yeah. There are basically 3 accounts, right? One account of around 372 crore is a Odisha-based group, right? We are a member. One account is a EPC contractor and one small account is a textile. So all put together is a 500 crore.
That's right. So basically, is it a trend that you want to see going forward as well, or it's like one-off stress that you have seen during the current quarter?
So this is an account. Actually, what happens in this account? They are supplying power cables and to the discoms. So there is a cash flow mismatch. As a result, what happens that the LC gets devolved. So already we signed ICA with them and we're working on the resolution plan. In the meantime, we are having around a 60% provision there against.
Okay. So during this current quarter also, we have made some additional provision on those accounts.
We are having more than provision, but we'll take a call when the quarter is end. Otherwise, presently we are having 60% provision.
And so one more question is that there has been an RBI nudge which market has been talking about to increase the SAR rate. What's your view on that?
Which one? Please come again.
RBI nudge on increasing the savings rate?
No. So the interest rates are deregulated, na?
Yeah. So because there was a market chatter that RBI is actually nudging the banks to increase the savings rate.
RBI on records have deregulated, sir. Deregulated the interest rate on deposit and advances way back.
So you don't think so that's going to happen?
The point is only the monetary transmission should be perfect, right? So monetary transmission, of course, we too have increased the deposit. What happens? The deposit we used to take 5% in the corona time, now we are taking it 7% plus. So in the deposit side it is gone, and what happens in the credit side also, 40% in CASA and 60% is converted into MCLR. So MCLR, which used to be 7.30, is today 8.70, 150 bps. So 250, 60%, 150 bps, more or less, you are transmitted, sir.
So that's very helpful. Next question we'll take from Sushil. Sushil, please unmute yourself.
Congratulations, team Indian Bank, for excellent performance. Sir, my majority questions are answered. My basic question is, sir, you are making your bank a future digitally and otherwise also enabled on various parameters, and you are known in the marketplace for a tat on large tickets. Can you throw a color how well you will do on retail on a similar count, and how soon you would be ready for all the digital initiatives and initiatives you've taken to bring down your cost of income on a drastic basis?
Yeah, so 2-3 points. One is basically digital journeys. So digital, we are working number of things from the core side as well as from the journey side, and also from the CSO, and also from the operations point of view. I'm telling you, first journey Bajaj has told, we have came out with the journey, the retail, agri, MSME, in operations, even in third-party products, in retail, housing loan, auto loan, personal loan, PAPL, gold loans. Likewise, now we are coming out in the agriculture, gold loan, SHG loan, in again MSME, small loan, GST-based loan, cash flow-based. In a third party, even the renewal of insurance, right? Loan against insurance policies. So number of things we came out on that side. Even I'm telling you from the cost point of view also, we came out with server centralization when I came, we discussed, and then we just rolled out around a few months back, around 3,500 branches. But today it is 5,000 branches have rolled out in a server centralization. What is server centralization? I'm telling you. Where earlier we used to have a server at all branches. Now all is centralized at our data center. So earlier what happens? You need to have a ACs force the servers 24/7, 5,000 branches, 10,000 ACs, and the 25% of the space is being occupied by servers. We have shifted all this. At the same time, we are also working on DMS, document management system. So where we are scanning the copies of document, whatever is available, and shifting to the go downs. So as a result, what happens? 50% of the space of the branches is being vacated, so that we are renegotiating. We are going for other nearby branches to save cost. 1 point. In the IT side, we have come on middleware. So now we are using even middleware for our other income, because you say suppose you do with Google Pay, that they are not bank transactions are being routed through the bank. So we can use our middleware. So we have started using for various customers for our middleware. In likewise, these journeys, even Forex also we have changed number of things. In our subsidiary also, already we have finalized today the memorandum articles, initial subscription, everything we are going approach to the RBI to allow us. So there are a number of things going on. In HR side also we have done number of things. Entire performance management system has come. We have given training for Forex. We have recruited people from the market, lateral recruitment at all levels, even up to the GM level. So we have done number of things to improve the operational efficiencies, to bring the new blood, to bring the new experience in the bank for a future. CMS also we started, now already finalized that. Vendor has alified, software is in place. So number of things we do. So results have started coming, sir. You see, Bajaj has told that in a short span 30,000 crore. So without any 30,000 crore, your OPEX has come down. You see the 28% growth in a gold loan happened only because of the digitization. Otherwise, it would not have been possible. So that the efficiencies will come through digitization in a time to come as well. I think I replied your question, or anything more you want?
Sir, you replied. Only thing is, this is going to have a big impact on income of the bank and margins and profitability. So, are you being conservative where cost to income is concerned, and do you see a far greater improvement by the quarter when you end the year, or you see it next year?
You see our profitability net profit has grown. Earlier we were getting tax benefit. Even after paying 28%, we are growing 60%, 70%. Yes. So these all results have started coming, sir.
Okay, sir. Second thing, your outlook on treasury is indicating that you are seeing treasury purchase to give you a benefit maybe in the last quarter or next year. So the interest rate cycle may peak out by December or March. I'm not predicting, but you are taking a view that for next year you will have a rich reward in treasury. So you see,
sir, we keep on churning our portfolios. Actually, when the interest rates started increasing, we churned our portfolio, and you see the interest holding yield of the portfolio is increased. So we keep on doing churning our portfolio to get better and better.
Low yielding we sold.
And low yielding even we sold even prior to this US bank failure and all.
Sir, do you expect profitability in treasury in Q3 and Q4?
Sir, there should be some profit, but you see, treasury's volatility of the market is also one factor, na?
Yeah, I take it on board.
But we keep our endeavor is always to answer, and wherever the good opportunities come, we take.
Thank you for answering all my questions. All the best to Indian Bank team for future.
Thank you,
Sushilji. Next question will take from Mayank. Mayank, please go ahead.
Yeah, hi sir. Thanks for taking my question. My question is again on provisioning line. So 574 crore we provided on this quarter against standard assets. So do we see stress in that portfolio? That is the reason we have created this provision, or this provision is created with the purpose of PCL?
No, provisions are always, usually the buffers are always created in good times. So we are passing through a good time, we have created buffers, but these are based on the portfolio, based on our own studies and all.
So it's not based on any incremental stress, these are more prudent.
And prudence is also there.
Got it. And what would be total outstanding excess provision, like which we created like this quarter, plus provision which we are holding on the restructured portfolio?
We too are having around 5,000 crore of provisions. Total standard asset provision.
This is excluding regulatory general provision.
That includes regulatory as well.
Excluding that, what would be the amount?
Maybe 75-80% can be higher. Exact we have to work out.
Okay. Okay, thanks a lot.
Thank you. Next question will take from Jay. Jay, please unmute yourself.
Yeah, hi, good evening, sir, and thanks for the opportunity. And congratulations on good quarter. Sir, I wanted to check on your cost of deposit, right? So, if I see your card rates, they are very competitive, and you have a decent scope on loan to deposit ratio also. But the cost of deposit has gone up significantly in this quarter. So how, I mean, what is the key reason for, such a sharp rise in the cost of deposit?
But you see the cost of deposit has increased because of non-reason. Non-reason is a deposit cost increase with the lag, right? But I'm telling you 200, 210, 220 bips increase in the deposit, which we used to take 510, now we are taking 720. 220 bips, 60% is your term deposit. Naturally, 120 bips will increase. Right? 120 but because some of the 3 year, 4 years, so 120 bips your cost will increase. This is natural, sir. This is natural. So with the repricing, this deposit cost has increased. But our endeavor is up to maintain that. So our MCLR has increased, our yield on investment has increased, because we can't say that deposit cost will increase. To remain competitive in the market, you should give a competitive rate. But my objective is to earn also.
Right. Okay. So, sir, if you were to see that, basis the repricing cycle, I mean, where do you think
so
this cost of
you compare September to 22 or 23, 87 bips.
Right.
So 87 bips means 150 bips, 60% of 150 bips.
Right. So, sir, I mean, where do you think, considering RBI does not do anything further, right? Let's say RBI is status quo for the next 18 months. Where do you think your cost of deposit should be settling? I mean, do you think this like 250 basis point at least will pass on in entirety on the team?
No. Point is that majority of the deposit is already repriced. So whatever you see when they started, They started May.
Right.
And around that 35 plus 20, 60. Around 190 bips they have increased till September.
Right.
So we do have increase of pricing till from the September onwards, right? So we are in the month of October now. And our duration of the liabilities is this 1.6. And you see 15% bulk and CD and all, because they are always up to 1 year. So they have already been repriced. And majority of them are on short term. So maybe 10-15 bits here and there, by the end of the March, this entire repricing should happen. But we are having MCLR book which is coming for repricing. So we are ready, sir.
Right.
We are ready.
Right. And sir, on your bulk...
We thought, planned 6 months or 1 year back to move to the MCLR because the repo is now virtually stabilized. Whatever increase is happening in MCLR.
Correct. So 1.5% we have already passed on in deposit also.
At 7.3 has become 8.7, 1 year MCLR.
Yes. So almost stabilized.
And you see all banks are taking this deposit for a 1 year, 400 days, 450 days. Right? So major increase is happening in this.
Right. Okay. Okay. And so, sir, you said that, even the yield on advances, they are rising, and this is purely mostly on MCLR repricing, right?
Right.
And are you seeing any incremental resistance in when you were to pass on the MCLR? Because some of the banks are commenting that, corporates anyway wants very finer prices, and they are letting go of such disbursements which are at finer rates. What has been your experience?
The experience, they are selling right things, sir. That is why you see corporate growth is less, no?
Yes.
So corporate is asking at a very, very fine rate, and then you can't make margin there, no? And suppose you take a money at a 7.5, 7.7 and put your DICC cost or your this CRR cost, then it is not viable sometimes.
Okay, understood. And lastly, sir, we had around 3,500 crores of MSME restructuring, which is outside of this COVID OTR 1-2.
No, that's all put together.
Okay.
So that is a 3,000 tranche 1 and that's subsumed in the COVID, no?
Okay, so that has been subsumed.
Amount maybe around 200 odd crore, which is outside this, nothing more than this.
Okay.
You are talking about the notes on accounts, because which is giving based on that particular circular of the Reserve Bank, right?
Yeah. So even earlier,
but
I think
remains, it is 200 odd crore, nothing more than this. We are beside this.
Sorry, this is not MSME, but sir, but this is pertaining to CDR and all those other cases. I think that was the residual.
Whatever you have done restructuring, some of have become NPA, even then you have to go as per your RBI circular and all. So, but that remains under those tranche 1 and tranche 2 amount is 221 crore as on date.
Right. But is there any other CDR or any other 525 which is outside of this?
Then all schemes have withdrawn, right? Nothing.
All gone. Total restructured book is 9,000. Everything
today only two type of, one is a COVID, one is a second you have increased your DCCO
beyond
a particular times.
Right. Understood. Okay. Yeah, that is it, sir. So very helpful, sir. Thank you.
Thank you.
Thank you, Jay. So we'll take last question from Mr. Ajmera.
I thought I'll not get the chance only. So anyway, sir, one is that, in your last, I think in the last quarter or so, you had said that for the CASA and for the retail deposit, you are working and giving main focus to institutional accounts, educational institutes, temples, and also the relationship with in the Lucknow, Chandigarh, etc. So, sir, any development? I mean, has it given any fruits? All this work on
six. You see, last quarter deposit was 6%. Now it is 9%, 10%.
So, I mean, we are continuing our.
Yeah, we'll continue, sir. We'll continue. So this is reflecting in our numbers, no, sir.
We are maintaining our CASA at 41%.
Maintaining even the cost of deposit
Yes.
in margins and all. So not only your deposit but your margins as well.
And sir, some color on the gold loan book, the gold loan and the yield on that, and what is the breakup of the actual gold? I mean, direct gold loan and the agricultural gold loan.
Yeah, gold loan we are having close to 70,000 crore of a book. 63-64 is in agriculture part, right? And what we have done, how we are managing this business, we are around having 650 gold shoppies, where we have not only given gold champions, even assessor, even caratometers, securities, safeties, then the inspections, controls, insurance, everything is in digital also, because everything should. So this is how we are doing this. But what happens in reality, I am telling you, the people are taking gold and even not taking gold back from us. So whenever they need, they come and take loan even. So this is like a loan against FDR also for us. Because we are doing this business from the decades. So this is a good business giving good return to us. Not only we are getting 1 year MCLR plus in this portfolio. And the portfolio is good and
fully secured and all that.
Good and growing, and same customer base is also improving. So that customer gives us a CASA and all.
Sir, on this provisioning, you were, I mean, in the giving answer of my colleague earlier, you were saying that, I mean, it's a prudent to be, providing in the good times. But in some of the earlier quarters, you said that now our provisioning requirement is reducing. So, we, of course, prudence is required and the cushion has to be built in. But at the same time, on a current basis, the analysts or the investing community always looks for the enhancement or increment in the profit, the bottom line, substantially. So now, going forward again, this time the provision was, I mean, of course, total provision was 1,550 crore, but out of that, against NPA, it was 917 crore, as against 929 crore in the last quarter. So just a small 10 crore less than the last quarter. So going forward, do we take it that since the provision requirement is coming down and we are very, very comfortable now on the net NPA, I think which is less than now 0.7 something, that the real profit will actually come in the books, shown in the books as a net profit without compromising much.
Definitely the profit will come in book only, sir.
And
the credit cost, which was 0.79, now our net NPA itself is 0.6. So credit cost will further come down. When your net NPA is 0.6, naturally your credit cost will come down. Cannot be more than this, right? And when your recovery is more than your slippage. Yes. Given the situation when your recovery, so naturally these all numbers will flow in the balance sheet, P&L.
But sir, in the last is, sir, this fall in the forex income, is it fluctuating things?
So, sir, earlier actually you see the difference between the Indian GSEC and the US GSEC. As there 5, we are at 7.3835, 2.35. At the same swap ratio, the swap premium, which was 90 days premium, used to be 3.32, to today is 1.32. So margins have come down there, impacting the forex income. But we have such other avenues for our other income growth. So you see that PSLC income was 479, we have 320 and 336 we have shifted, 650, 300 crore we have earned there. So
you had explained me once in detail, in fact your GM Treasury also, at that time when the forex income was coming very good, I mean the difference was quite attractive. So now going
but
forward,
the forward premium has come down drastically. That's why earlier we used to have roughly 38,000 crore interbank placement. Now that has come down substantially.
So based on the market, our incomes, but we are having various revenue streams, sir. We keep on working to have growth in our other income.
I'm sure you would, sir. Thank you very much, sir, for giving this opportunity second time to answering almost every question by the analyst. So we are more clear about this bank. We wish you all the very best. We still feel that the bank is still undervalued to the market and you should get the right price.
We are open for all questions all time.
So then basically, sir, with your permission, can we take two more questions?
Why not? Please.
Yeah, sure. I'll take the opportunity. So Mr. Puneet Daga would want to ask a question. Puneet, please unmute yourself. Puneet, please unmute yourself. Can't hear anything from Puneet. So we'll take a question from Mona Katan. Mona, please go ahead.
Yeah, hi sir. Just a small clarification. So, you mentioned some time back that standard asset provisions stand at about 5,000 crore in your case, right? Including general, restructured and other provisions. Hello?
Yeah, please.
Yeah. So, if I remember it correctly, this number was about 6,800 crore last quarter. So, has this
some of the provision? Yeah. Please. Some of the provision we have excluded, na? Because we are talking about the standard asset provision.
Okay. So, what is the like to like against that?
Other provisions are 7 June provisions or.
Sorry.
So, madam, otherwise you send us a query, we'll reply you, right? So you will understand better.
Sure, sir.
Yeah, thank you. Next question we'll take from Jay. Jay, please unmute yourself.
No, my question has been answered. Thank you.
Sure. So basically, I think the question has come from Puneet. He wants to get the guidance on OPEX, number one, and second question is, when can we expect the QIP to get completed?
That's good. So OPEX is basically two components. One is a salary and other operating expenses, right? And salary itself has a three component. One is a salary, one is a wage revision, third one is a PLI. So you know that PLI is payable when your operating profit is more than 15% or 15 days. So we started, earlier we used to do these provisions on a December or a March quarter. We started from the first quarter onwards based on our numbers and all. So this is a PLI part one. Second part is that this wage revision has become due. So this quarter we have paid around 271 crore of a wage revision provisions, and presently we are having around close to 689 crore of a wage revision provision. The other overheads is basically slightly increased because of some ATM related expenditure, because when your digital transaction will increase, naturally your operating expenses increase when your digitization is happening in such a large scale. So AMC charges, right, and even the card issuance charges, even the UPI charges, these are all payable. So this is all a normal business operation. If your top line grows, naturally some expenditure part will also grow. So if you exclude this PLI and wage area on a like-to-like basis, on a salary only grown by 5%.
And so basically for the wage revision, we are providing at 12% or we have started providing at 15%?
Percentage, we will not be able to tell you, but we are adequately provided.
Sure, sir. I think that's it from the audience. So we can wind up the call. If you have any closing remarks to make, sir.
Come again, please.
Yes.
So if you have any closing remarks to make.
Yeah. So thank you all analysts and investors in a continuing interest in the bank. So we'll again meet next time with a better performance. Thank you once again.
Thanks a lot, management, and thanks a lot all the participants. With this, basically, we will end the call. Thank you.
Thank you.